Yes, we are creating a Tesla insurance product, and we hope to launch that in about a month.
Okay.
It will be much more compelling than anything else out there.
What you just heard was a comment made by Elon Musk, who confirmed that Tesla insurance was going to happen. This comment was made on a Tesla conference call almost 2 years ago. But still to this day, no one seems to have realized what this truly means for Tesla. You see, it could very well change auto insurance as we know it today, forever. Although some of the reasons behind Tesla wanting to do this are more obvious than others. And one of those reasons is something that I haven't seen anyone truly understand or know about, which is what I will be covering in this video. Also, only a small percentage of people who watch my videos are actually subscribed. So if you end up liking this video, consider subscribing, it's free and you can always change your mind. Okay, so to understand why Tesla wants to get into auto insurance, it's actually not that difficult. You see, the market size of the auto insurance industry is expected to hit $311 billion in 2021, and that is in the United States alone. However, on the global scale, the auto insurance market size is projected to hit $870 billion in the same year. So, it's fair to assume that Tesla's reasoning for wanting to get into auto insurance can partly be contributed to the sheer size of it. Because even with a small market share, Tesla could increase their annual revenues and profits by quite a margin. But this might not be the only reason why Tesla wants to expand into this industry. You see, Tesla is one of the few companies in this world who are really good at vertical integration. This matters immensely when you are making products in the price ranges that Tesla does. Because even with just a 10% discount on a long-range Model 3, it would amount to a considerable $4,700 saved for a consumer. Although purchase price is only one of the many factors that play into the role of a car buyer. You see, the average person owns a new car for about 8 years before they get rid of it and get a new one, which means that they will also have to pay for insurance for those 8 years. Now, the cheapest option to insure a long-range Model 3 if you are to choose something other than Tesla insurance is Geico. They charge around $1,900 annually. This means that over an 8-year period, you would pay $15,200 in insurance alone. Obviously, that varies depending on some different factors, including age, gender, driving experience, and so on. But the thing is that this is a cost you can't eliminate. The only thing you can do is to try and negotiate with Geico or the other companies to see if you can get a lower rate. Although you won't be getting that much of a discount, unless of course you choose Tesla's insurance. You see, Tesla promises up to 30% lower rates than their competition, which over that 8-year period could save you almost $4,600. That is pretty significant. But you might start to wonder how Tesla could provide a service that is that much cheaper, considering there's already fierce competition in this field, which should already have brought down the prices for the consumers. And sure, if Tesla was playing on the same field as the other insurance companies, it would be true that Tesla couldn't provide a service that is 30% cheaper, at least profitably. But the thing is, Tesla is not playing on the same field as their competition. Tesla has something they don't. You see, Tesla uniquely understands its vehicles, technology, safety, and repair costs because, well, they are the ones making Teslas, and they basically own the whole supply chain. This eliminates fees, usually taken by traditional insurance carriers. Although this is only part of the equation. Tesla not only understands its vehicles, but they also know their drivers in a way that insurance companies could only dream of. Tesla's vehicles are fitted with a bunch of cameras, sensors, and radars that enable Tesla to know how aggressive you are, how fast you drive, what areas you drive in, and so on, which enables them to give you a price that much more accurately reflects the risk you and your environment poses to your car in any given day. Yes, you heard me correctly. Tesla's insurance can go up or down in any given day, depending on your driving. So, if you are particularly aggressive and are speeding too much on any particular day, your insurance will go up immediately, as it's simply riskier to drive faster than you are allowed to, not to mention being aggressive towards other drivers. This is incredibly valuable, both to Tesla, but also their customers, because people will no longer be put into these generalized buckets that other insurance companies have to rely on. This is why I, a 20-year-old male who have owned no cars previously, could get a much lower rate with Tesla insurance than any other company. Because 20-year-old males are usually put into the bucket labeled high-risk drivers. Because generally speaking, we are. But that also means putting those who are actually good and responsible drivers in that same bucket, which makes it very expensive to insure a car as a young, inexperienced male. But that's just one of the many cases in which Tesla insurance will be a superior option. Although, sure, if you are against this type of insurance, where it calculates an accurate rate based on your driving, it's likely that you are one of those people who are increasing the insurance premiums for the rest of us, meaning that you will be the only loser in this equation. But I think now is a good time to reveal the last reason for why Tesla would like to offer auto insurance. And that reason is full self-driving. Think about it. How would a traditional insurance company offer insurance for a self-driving vehicle that they have no data on? Well, they can't. It would be like shooting an arrow in the dark, trying to hit an apple 100 meters away. It's just not possible to make an accurate calculation of risk when you don't have the data needed to calculate it. Tesla knows this, and it's a big advantage for them for a few reasons. You see, Tesla knows exactly how good their full self-driving software is, which means they can adjust the rates each time it gets better and safer to use. They can also see how much any specific person uses autopilot, which is important because they can use that information to lower the insurance premiums depending on how much it's used. This means that the promised 30% lower insurance premium is a conservative estimate, which is great for the consumers. But what about Tesla? How much could they really earn from this? Well, assuming an annual average revenue per customer of around $1,338, which is 30% less than what Geico is charging, we can multiply that by the amount of cars Tesla will be able to insure. This is where it gets interesting. You see, currently there's about 1.4 million Teslas on the roads. This means that assuming only 50% of Tesla owners will opt for Tesla insurance, Tesla could expect to see annual revenues just shy of $1 billion. This is great, but it's nothing in comparison to how much they will earn in the future from this. You see, Tesla is expected to grow at a 50% annual growth rate for the coming years. And considering they produced 500,000 vehicles in 2020, they should be making a considerable amount of vehicles in the coming years that they can insure. Although just 5 years from now, in 2025, the potential revenue that Tesla insurance could generate gets pretty ridiculous. Assuming a 50% annual growth rate, that should be around 11.3 million Teslas on the roads by the end of 2025, which should bring Tesla a lot of revenue by itself. But assuming 50% of those vehicles will have Tesla insurance, Tesla could generate $7.6 billion in revenue from that alone. Although it's very likely that the number of Tesla owners who would choose Tesla insurance, if given the opportunity, would be much higher than that, as it would be cheaper and much more appealing than other insurance products. This means that revenue should be closer to 15 billion, not 7.6 billion. But revenue doesn't mean much if you don't have anything left on the bottom line. So let's talk about profits. Usually, the auto insurance industry averages around 5% in profits, which is not that much, but you'll have to remember the auto insurance industry is very competitive. This brings down prices significantly and leaves all companies with razor-thin margins because they're all on the same playing field with the same rules to play by. But as you may remember, Tesla will not play by the rules. Instead, they can individualize insurance premiums according to the carefully calculated risks each specific driver imposes on their vehicle. This means that Tesla can actually calculate with extreme accuracy how many claims they will receive from any specific driver and how large those claims will be before it even happens. And then they can put their markup on top of that. And as long as their prices are below the competition, Tesla can decide how much markup they want, which means that the industry average of a 5% profit margin won't be applicable to Tesla. Although it's anyone's guess how high their margins will be, but you shouldn't be surprised to see 20 or even 30% margins on this, which would definitely disrupt the industry. But when it comes to destroying it, Tesla insurance would have to be available for more than just Tesla's vehicles. And for that to happen, Tesla's competition will not only have to fit their cars with cameras, sensors, and radars, but also give Tesla permission to access that data gathered from these components. not to mention the fact that the other car companies like Volkswagen, Ford and GM would have to say goodbye to their unearned pride and arrogance and implement a system that would make them rely on Tesla, which is just simply not going to happen. But when Tesla releases their insurance product to the rest of their fleet, they are most definitely going to set the new industry standard, which in many cases would be yet another reason for someone to choose a Tesla over the competition, increasing Tesla's automotive market share, which would in turn increase Tesla's auto insurance market share as well. This means that over time, Tesla Insurance will exponentially increase market share, and at some point, other auto manufacturers will realize they will have to implement something similar to compete with Tesla, just like they did with electric vehicles and full self-driving. So, in this decade, we should see traditional auto insurance slowly fade away over time and get replaced by either Tesla Insurance or the other auto manufacturers' insurance products. Although it is pretty clear that Tesla Insurance will have the largest market share by far by the end of this decade, meaning that eventually Tesla Insurance will destroy the auto insurance industry for good.